So what are people doing? What are people thinking? Well, talking to a number of them, I was with an accountant and a client yesterday. We were administrating a death claim for her husband from the pension scheme, and the kind of conversation was around, well, these new Lamborghini rules that are coming in, and what we'd be able to do is just take the money out of the pot and then go and buy a Lamborghini. So, or alternatively, take the money and invest that into property. So there's a kind of quite a big thing about property in the UK. People are a bit, sort of obsessed about property. That's the way I'm going to, that will solve all my problems, and it will give me a guaranteed rental income and so on. So I'm just going to walk you through, well, yes, you could take all the money out of the pension pot and then go and buy an investment property and get some income, and just going to show you how that might look. So I'm going to take this £400,000 pot again. There's a thing called income tax that you need to pay when you take the money out, and a lot of people just haven't got that. They think the 400 is going to come, and it's not. So I'm going to take quite a slice out of the wealth to start with. Then go and buy property. You've got stamp duty, capital gains on the property later down the road, solicitors' fees, and a rental income, probably around about £1,000 a month from this kind of property, and then you've got income tax to come off that. Estate agency fees, probably left with about £540 a month. Okay. Notwithstanding rental voids and all the rest of it. So the alternative mindset is that, okay, a pension is annuity. We don't like annuities. We're really scared by them, but there is another way, and the alternative would be to just embrace the pension pot, look at it as if it's money in the bank, it's wealth sitting there, and design that to give you a sustainable income. So we saw earlier something like 31,000 from the government limits, but we know that's going to significantly erode the wealth. A sustainable income is more like 20,000 a year. Maybe if you're age 80 or 85 and you want more income, then you've got a different mindset, but sort of 60, 65, it's about the wealth outliving you. About 12,000 per annum net that will give you, which is equivalent to £1,000 a month net. In the event of death, all that wealth would go to a surviving spouse, and in the event of that spouse's death, then there's a legacy to next generation. Annuities don't provide for that. That pension dies with you, and that's a big problem that people have with them. They've worked all their life to build up this pension pot, and to then exchange that wealth to an insurance company is just really quite a hard thing to come to terms with. So what are the conclusions, what are the outcomes? Well, take the money out and invest into property and £540 a month or thereabouts, or design the pension in a way and the wealth in a way that it's giving you sustainable income, which is about £1,000 a month net. It's no-brainers. Yeah?